Welcome back, everybody, for another YouTube video. This is going to be a bit of a different one. You guys know that we are a crypto eccentric channel. We are crypto traders, investors, and educators. However, increasingly, as crypto traders, our attention has really been shifted towards a sort of macroeconomic environment because it's been driving our market really since November, since all your central banks, or certainly the US central bank, decided to start upping interest rates in the name of trying to tame and fight inflation, which has not happened yet. I believe inflation is going to stay stickily high, and we're going to enter some sort of a stagflationary period. But I really wanted this video, and it's why we think we have lower prices coming from not just the stock market, gold. Everything is going to get hit as a result of this kind of liquidity draining property of everything going on. But really, I wanted this video to be very UK focused and really talk about the Bank of England, talk about the bond market, talk about the Great British Pound, the US dollar, and really start the video off by warning people and telling people that if up until potentially this video or you've gone throughout your life not really caring about finance and how it all works, now is a better time than any to start learning. And now is a very good time to start understanding the fiat systems that we use and how they work. Because if you understand that money is essentially issued, this word printed, via debt, it is debted into existence, you'll understand the severity of the situation that we have with the bond market. Often money is sort of borrowed into existence through treasuries, through bonds. They are essentially debt instruments, and we are seeing, not just in the UK, but across the world, debt instruments, fixed income instruments that are government backed. And we're going to talk about the gilt yields for the UK. Gilt yields essentially, or gilts, bonds essentially, are just what they essentially mean in layman's term is low risk bonds, low risk instruments, essentially low risk investment instruments, because they're backed by the right people. But we're seeing a capitulation event in those yields. We're seeing a bit of a pullback, in the actual bonds themselves, and we're seeing the yields go through the roof. How bonds work is they are essentially self-regulating in regards to the fact that you have your bond, which has a price that's speculated on by the market, and that is the price. And when those bonds go down, the yields go up, i.e. the interest that those bonds will pay you, or the dividends, however you want to look at it, those bonds will pay you, goes up to entice and sort of stabilize the price and make them more attractive. We are seeing yields. It's not just for the UK. This is the US 10-year, the US government bond 10-year yield. I'll put it on a line chart to make this a little bit more apparent, go through the roof. In my opinion, it's unprecedented times that we live in, guys. March 2020 onwards, I think, has changed the world forever. And we're seeing this in the bond market. Remember how central treasury yields, bond market, largest liquidity, biggest markets in the world. Why we've had to pay attention to these as crypto traders is because they are moving our market. Markets generally are liquidity based, and liquidity often chases yield. It's why we're seeing capitulation in the UK markets. It's why we saw a huge spill for the Great British Pound against the US dollar, because people are going to go where they're best served. They're going to go and get into a currency that has a lower rate of inflation but offers a higher yield. If the UK come out and do a 50% basis point, a 0.5% interest rate hike, but they have higher inflation, it makes sense to go to a country that has a lower rate of inflation with higher interest rates. They did a 75, the US. So it's natural that you're going to see that sort of flight of capital moving over there. And you're seeing a huge dumping of bonds, which is why you're seeing the yield spike up in the UK. This is worrying because what are some of the largest... Remember, the whole kind of fiat system is very much... its foundations lie in these markets. It's not just that. The entire pension market, pensions are mandated to have government treasuries and bonds in the name of stability, because of course these are people's pensions. The idea here is you don't want to go out and buy stuff a pension full of Dogecoin because it might crash. So take a low risk fixed income instrument instead to sort of guarantee. But what we're finding is, given what happened from March 2020, given inflation, given the sort of situations that we've got going on, these low-risk, stable assets have become all of a sudden very unstable. And this is worrying because it's the bedrock of the UK economy. It's the bedrock of all economies, in my opinion. It's affecting the FX market. We're seeing we're seeing currencies move like cryptos, and we are seeing liquidity really take flight in terms of being scared into the US dollar. It's why the US dollar has had such a bid. It's weird because, like I say, as crypto traders, we've really just been watching the FX markets, the dollar, the Dixie, and sort of, the S&P to kind of navigate where our market's going, because we're still very small as a market. We're only, not even $1 trillion market cap, and there's multi-trillions in, hundreds of trillions in bond markets across the world. The more scary thing, perhaps, is what are the Bank of England now? They're essentially intervening in the bond market after this historical sell-off in the gilt bonds. Yields have spiked through the roof. Remember, it's a self-regulating market. What are they now proposing? Well, they're essentially now going to print money, issue more debt, and take on, I should say, more debt. And remember, all countries run huge amounts of deficit. The debt is never going to get paid. It's why actually the inflation of the money supply works for governments, because it also inflates the debt that they owe in terms of real value. The proposal the Bank of England essentially have came up with, which is why we've seen this huge wick here for the gilt bonds, the 10-year gilt bonds, because it's the long duration bonds that they're buying up, as they're the ones that are suffering most negatively with a sort of negative outlook on the pound and the UK economy. They're essentially proposing buying them at any means necessary. The EU also proposed this, and Japan has essentially had this proposal where they will essentially hold up the bond market for a while. And we're seeing a Japan style economy, the yen style economy and measures take place within the Great British Pound and the Eurozone. Not seeing it in the US yet. Is that potentially something that comes down the line? Maybe, but we've still got that huge flight of capital into the US because it's offering the best yield. That being said, bond market is still getting extremely devalued from the US, and this is the yields, remember, so there's an invertly correlated. The yield market, which is the almost derivative percent that you get paid for holding the bonds, has been going down for 40 years, and essentially we've had you could have just gone long bonds for 40 years and you'd have done all right. You just parked your money in there. I think from March 2020 onwards, that's changed, and we are seeing the cracks show up in the fiat systems across the world. It was John Law who originally, back in I think the 1700s, potentially I could be maybe 1800s, I could stand corrected, who essentially came up with this idea of currency, money, that was backed by nothing physical other than a promise to pay it back. And that ended rather catastrophically. And I think that fiat currency systems that we currently have are on a similar trajectory. The father of modern economics, Adam Smith, is very famously quoted as saying money is essentially an ideology. And I believe, and I don't really share these views often, that fiat systems are exactly that, an ideology. And I think the masses have largely been hoodwinked and know nothing different, including myself. I've been born in fiat systems to basically, work for money that we have no say over, no control over, and are controlled by people, a very small number of people, yet affect everybody. It's time to start learning about finances, guys. And that's what we try and do on this channel, even though we're crypto-eccentric. I also think that 2008 was where the cracks in this system really started to show up, this debt-based system. And it's almost too much of a coincidence that Bitcoin came about beautifully. And you had this new alternative money system that is excelled to where it is today. On Tuesday, we saw a massive spike of volume, nearly $900 million worth of volume go into Bitcoin from the Great British Pound as people look to flee the pound into Bitcoin. We've seen more money than that go into the dollar from the pound. And this is because, again, back to the point I made at the start, people do not want They don't want pounds. When there's better alternatives, and the pound, by the way, this is the dollar against the GBP. We're seeing a huge wick as we now see the Bank of England intervene and say they're going to buy up the market. We're seeing. Better plug my laptop in here, guys. I'm on the move. Didn't really expect to make this, but I've had lots of people asking me what's going on. We've seen essentially the dollar gain 26% against the pound, and we've seen the pound since the start of the year devalue by a whopping 21%, and actually at one point it was devalued by a whopping 25%. So you have got 25% poorer in regards to imports. You've got 25% poorer, or 20% now, in regards to against the US dollar, and you have no say in that as a citizen. You just take the currency that you're legally, the sort of legal tender that you're obligated to take in your jurisdiction. 1 second, guys. I'm just going to plug my laptop in. There we go. So the real interesting thing for me is what essentially, and how's this going to affect markets? You guys know that we essentially are out of markets generally, and if you're new to this channel, guys, please hit that subscribe button. We try and keep you right. We give daily crypto market updates where we look at markets generally. You guys will know that, follow me regularly. We've been in US stable coins for months now, and my entire Patreon community has had the same advice given to them. I'm not a financial advisor, and it's not really advice. It's just what I'm doing, and almost a recommendation, if you will, that I see more safety in stable coins. Stable coins are a lot more easy to access. Instead of having to go and get a sort of international bank account, it can be very expensive and costly to do, whereas you can buy stable coins via crypto apps. And this isn't a call for you to do that now. Okay, it's almost a little too late, and now that they're going to intervene, we may see a bit of stability. But I still see, for the fundamental reasons that we mentioned at the start, the US dollar continue to gain dominance over everything. It's going to be the last man standing, essentially. And there's a number of reasons for this that we won't go into in this video. So the interesting thing for me is, because we've seen this huge sell-off in the gilt, the 10-year UK gilt yields, the Bank of England essentially going to have to step in and intervene. So I'll read through this article and then I'll wrap things up. The interesting thing about this is they are going to print money and essentially stabilize and negatively affect what they're trying to do in regards to the fighting inflation. They've kind of diverted from that and going, okay, well, we're going to have to stabilize the bond market in order to do so, and they don't really have much choice other than to do this. So let's get into it. Bank of England intervenes in bond market after historic sell-off. UK gilt yields were on course for their sharpest monthly rise since at least 1957 as investors fled British fixed income markets following the new fiscal policy announcements. So this is getting blamed on Liz Truss's tax cuts, essentially. I don't think that's the case. I think that may have amplified it, but it's kind of like blaming Lehman for the 2008 financial crisis. It was going to happen, and Lehman were a huge catalyst for it, whether it was Lehman or whether it was another sort of investment bank. So the measures include large swathes of unfunded tax cuts that have drawn global criticism, including from the IMF. So this is from London. The Bank of England will suspend the plans to start off its gilt selling next week and begin temporarily buying long-dated bonds in order to calm the market's chaos unleashed by the new government's so-called mini-budget. It wasn't a mini-budget at all, by the way. It was quite an extensive budget. But essentially, because of inflation, all banks around the world have gone, right, okay, we need to start tightening. We're going to tighten in terms of upping interest rates. We're going to bring, and this is the key phrase here, we're going to bring demand in line with supply. So we're going to kill demand, basically, to match the supply that we've got. And that's why we've been out of crypto largely. We still have a bit of exposure to crypto and investments largely for a while now, because we believe that investing is a liquidity game and you need to follow the liquidity and understand when that tap is turned on and off. So they've gone from essentially, instead of tightening and reducing their balance sheet and selling off the gilt yields, to now having to buy them. How's this going to affect inflation when we have an extremely stubbornly high inflation of around about 10% in the UK? This is killing consumers. I know so many business owners that are getting affected by this. Fish and chip shops, swimming pools, you know, things you wouldn't think about. And that's forgetting your everyday individual that has to travel to work and use petrol. And essentially, you know, I was looking at coffee. You're paying £10 for a tub of coffee nowadays. To me, that just seems insane. I remember when, you know, as a kid, £10 was a lot of money, you know. Well, certainly it was to me back then when I was younger, which wasn't that long ago at all, by the way. So yields on the UK government bonds, known as gilts, were on course for their sharpest monthly rise since at least 1957, as investors fled British fixed income markets following the new fiscal policy announcement. The measures included large swathes of unfunded tax cuts that have drawn global criticism, including from the IMF. So I'm not going to comment on the budget, although I do have a lot to say about it. In the statement on Wednesday, the central bank said it was monitoring the significant repricing of UK and global assets in recent days, which has hit long-dated UK government debt particularly hard. Where dysfunction in the market to continue or worsen, there will be a material risk of UK fiscal stability. So they're talking about, you know, the UK money itself in the UK, that the kind of fiat money that we have. This would lead to unwarranted tightening of fiscal conditions, financial conditions, and a reduction of the flow of credit to the real economy. Liquidity, in other words. The Bank of England said, in line with its fiscal stability objectives, the Bank of England stands ready to restore market functioning and reduce any risk from contagion to credit conditions for UK households and businesses. As of Wednesday, the bank will begin temporarily, so today, purchasing of long-dated 10-year gilts, so 10-year UK bonds. You can see we've had this huge wick here. We've also seen the dollar get a bit of a slam down as a result of this. This has artificially pumped the cryptocurrency market. You guys know that we expect crypto to come lower. We've been out since 44k, but there is the potential that we do see those lower prices. So as of Wednesday, the bank will begin temporarily purchasing long-dated UK government bonds in order to restore orderly market conditions, and said there will be a carried out on whatever scale necessary to soothe markets. The EU essentially said the same thing. They're willing to prop the market up, just like Japan has been doing for ages with their market. And the issue with this is we end up in a situation where there's no value to debt. And remember, the entire system is based on debt. I honestly think that we are going to see the failing of fiat systems within our lifetime. And what do we go to? Remember, it's very coincidental, and there's lots of talks about CBDCs, that crypto came around in 2008, and we had this alternative monetary system that enticed libertarians like myself into it. So the bank's Fiscal Policy Committee on Wednesday acknowledged the dysfunction in the gilt market posed a material risk to the country's fiscal financial stability, and apt to take immediate action. The Monetary Policy Committee targeted of an annual $85 billion. So actually there's not that much in it anymore between dollars and pounds, and we are potentially looking at a parity, so £1 worth $1. Reduction of the gilt holdings remains unchanged. The bank said, so they're still planning on reducing the balance sheet, just like the Fed's doing. The bank said the first gilt sale, initially slated for Monday, is now taking place at the end of next month. So they postponed it by a month. We'll see what actually happens when they get round to that. A UK Treasury spokesperson confirmed that the operation had been fully indemnified by the Treasury, and said the Finance Minister is committed to the Bank of England's independence. So they're talking about the Bank of England's independence here, and here's an example of the UK 30, 10 and 2s. The yield's just going through the roof. And this means the bonds and the value of those bonds, the value of those debts going down, as people don't want them because they don't trust in them anymore. The government will continue to work closely with the bank in support of its financial stability and inflation objectives, the spokesperson added. The bank said it will publish a market notice outline outlining the operation detail of the program shortly. Yields on the the UK 30-year gilt and 10-year gilt dropped sharply after the announcement. So, of course, naturally, it's why we're seeing this huge bid here, and we're seeing the pound do well. Oh, sorry, the pound actually gained some strength now against the dollar. Remember, these are all very correlated. Look at this for the US dollar. Huge blow off here, potentially. Does this mean that the crypto market sees a little bit of a rest period? Potentially, and do we get that next push forward? So it's essentially saying they dropped as they've done this. So it's an absolute mess. This essentially means that they're willing to print and continue to provide inflationary forces into an already hot inflationary environment. And is this potentially the start of a pivot from your banks? Potentially. I just don't happen to think that we're going to get the pivot just yet. You know, we'll turn bullish on markets again if all governments around the world start printing and start, you know, having the markets back. But until we see clear evidence of that, and this maybe is a domino of that, but, you know, nothing abundantly clear just yet. So that's really all I've got for you in this video, guys. If you have enjoyed this content, a like is always appreciated, so is a comment. It's going to be interesting. I believe we're already in a recession and that it's going to get worse. And what I think we're potentially seeing at the moment, and we've seen it in smaller countries, and now it's happening with your larger countries like the UK, is potentially the failing of your debt-based systems. All I've got for you in this one, guys. If you enjoyed the content, like, always appreciate it, so as a comment. Anybody that's new to the channel, make sure you hit that subscribe button because we'll keep you right on the markets daily. All I've got for you. Have a wonderful Wednesday. See you in the next one.